Welcome to GP Bullhound's Tech Thoughts, a weekly overview of economic developments in international markets. Today is the 10th of June and we are here with Inge Heydorn for our weekly market roundup. In today's episode, Apple, gaming, and new demand for tech products. But first, market news from Inge. Over to him.
Thank you, Maria. The market volatility has continued for global equities, as you all seen, and especially in tech. On the segment side, we saw fintech really being hit hard after Apple announcing their entrance into buy now pay later segment. On the positive side, although, they didn't change the standing against fingerprinting for the moment, and that really had gave some breathing room to Snap and the players in the internet ad tech market. But with that stated, there's definitely a mixed message coming out now in terms of tech. Intel clearly highlighting that things have deteriorated during the quarter since they gave the guidance, which clearly indicates that they're going to be on the lower end of their guidance or even below. A lot of people now starting to believe there may be even a profit warning coming out from Intel. But on the other hand, Snowflake out stating that nothing has really happened, the clients stand strong and things are ticking along as normal. And on top of that, given that we have now seen the Taiwanese numbers for May from the companies there, you saw TSMC numbers this morning coming out 65% growth year-over-year, UMC 42% growth. So it's very, very positive numbers when it comes to semiconductor shipments. So the positives from the messages coming out this week is really, firstly, AMD cap market yesterday, very, very strong product portfolio, no guidance change at all, which is good because now we're quite late into the quarter. And interesting there also is the fact that a lot of their products are now moving over to 5 nanometer, which means that we need to build more capacity at 5 nanometer. Going over to the Spotify cap market day was on Wednesday. They're really highlighting the long-term gross margin movement and the ARPU movement for them, which is seen as a very, very positive, I would say, guidance on the company. We're not really there. It's a little bit wait and see for us. It's quite far away from where we are for the moment with falling margins, especially as they're spending a lot of money on podcast. So for us, it's a little bit wait and see for the moment when it comes to Spotify. Cisco is also out this week stating that things are improving in China since the lockdowns are easing. But now with that stated, Shanghai is now going back to lockdowns in the last few hours here. So very, very mixed pictures coming out in tech, but let's start to summarize it from our side and see what we think. Firstly, yes, weak product portfolios, weakness on consumer side, so on the PC, TV, mobile and so on, just continued. On the enterprise side, yes, things are not splendid, but they're ticking along. And when it comes to software side, they're ticking along. When it comes to hardware and semiconductors, it's even improving as the limitations in the supply chains are improving, and that's really increasing the output for the moment. And we think the market is once again overstating and overshooting the downturn in the semiconductor side because there's so much pent-up demand, and we can take quite a lot of hits in terms of demand and still produce at a very, very high level. So TSMC numbers for the month, 65% up, 6.7% month on month up, very, very strong. And given that, also think about the CapEx intensity there, both in CapEx sales and CapEx to EBIT, it clearly declines as the vendors in the semiconductor equipment, which we especially like, are struggling to supply and are maximum running at 20% growth at this point in time. So good news that AMD and Apple is now highlighting new products for 5 nanometers. So during the week, we have increased our position in on the semi side and especially in TSMC, which we think has been pressured a little bit too much on the worries about capacity in the industry and the downturn.